Hi friends, Gia here. Welcome if you're new, and if you're already a subscriber, thanks for coming back. Welcome to the third and final video in my Investing 101 series. I've loved this series so far. I love the feedback that I've gotten. So just to recap, in video 1, we talked about what it means to invest and the power of compounding interest and what those simple terms and terminology means. And in video 2, we talked about what the stock market is, what's NASDAQ, and what's the New York Stock Exchange. And if you're interested, you can watch the entire series or all 3 videos. I'm going to put in a playlist. You can tap this I right here. But in today's video, we're going to be talking about what mutual funds are, what are index funds, the S&P 500, and the Dow Jones. But first, I wanted to let you know, in this series, I'm only giving objective terminology and terms to try to understand what it means to invest, what you hear all the time, what they mean. It's strictly objective, and I try to explain it in a simple way. But if you'd like more of an in-depth conversation about investing and what my thoughts and personal beliefs are when it comes to investing, what I invest in, what my easy investment strategy is for someone who doesn't work in investments all the time, you should take my class for $15. I'm going to be talking about, what I invest in, my asset allocation. I'll be answering your questions live. If you buy it before the live stream, a replay will be available for you. But after May 17th, which is the day that I'm going to be live streaming the Investing 101 class, the price is going to go up. I am not a licensed broker, nor do I want to be, but I am someone who does the investing for her family. I have a finance degree, and it's something that interests me, and I try to educate myself constantly about. So I highly encourage you to join us on May 17th if you're available on investing. It's something that I think will definitely benefit you in the future. All right, so let's talk about mutual funds. The investment definition of mutual funds are an investment program funded by shareholders that trades in diversified holdings and is professionally managed. The combined holdings or money given as an investor is known as a portfolio. There are all types of mutual funds. Oftentimes you'll hear Dave Ramsey say that he invests only in mutual funds. I think he has 4 different types of mutual funds that he invests in. There are all types of mutual funds. There's growth and income, there's international, there's specialty funds. I mean, there are all types of mutual funds. And I want you to think about a mutual fund like this. Think of a mutual fund as a basket of investments or assets. There's stocks, there's bonds, all different types of assets. And this basket is professionally managed by an investment company. It's managed by the investment company on behalf of the investors. So think of it like a whole bunch of people put their money together and invest in this one mutual fund. And this investment company manages what assets go in and out of the mutual fund. The investment company makes all the decisions about what goes in and out of the mutual fund or what assets go in and out of the fund. In exchange, there is an investor fee that gets associated with the funds that you buy. This is why it's called active management. There's someone, a professional broker, constantly buying stocks that go in and out of the fund with whatever type of fund that the investors decide to invest in. So it could be constantly changing. Like I said, there's the fees associated with it because you're actively buying stock or assets or bonds or whatever. And each time there's a change made, there's a fee associated with that that gets, tagged on to the investor as a fee. So those are mutual funds. Now let's talk about index funds a little bit. An index fund is a type of mutual fund with a portfolio constructed to match or track the components of a market index such as the S&P 500. So an index fund buys all the shares associated with a particular market. So the main difference is with an index fund, you buy and hold. You buy the funds and that's it. When the market goes up and down, you go up and down with the market. Whereas with mutual funds, sometimes they sell, they buy, they try to beat the market. That's the main difference between a mutual fund and an index fund. A mutual fund, it's actively managed by an investment company, and that investment company will buy and sell different things to try to beat the market. Whereas an index fund, you buy and you hold it. You hold it for the eternity, for however long you have that index fund until you sell it. And the premise of it is it's cheaper because you don't have all these transactions going in and out, and you don't have all these fees associated with it. And guys, get me wrong, this can get extremely complicated, especially mutual funds. It can get super complicated, especially with the type of mutual funds that you can buy. And I'm trying to explain it as simple as I possibly can. So the main difference between a mutual fund and an index fund is a mutual fund is actively managed by an investment company on behalf of the investors and buy and sell stuff or assets within the portfolio. Whereas an index fund, you buy it, what you buy is what you get. And pretty much however that market, because they're all different types of index funds as well, however that market does is how well the index will perform. All right, so let's talk about the S&P 500. The S&P 500, or the Standard & Poor 500, that's what the S&P stand for, is an American stock market index based on market capitalization of 500 large companies having common stock listed on the New York Stock Exchange or NASDAQ. Now, I explained what those two are in video 2 of the Investing 101 series. Again, you can tap this eye right here if you're interested in watching that or learning more about that. So essentially, the S&P 500 is a measure of the stock market. It's your top 500 companies. These companies are usually the best performing, top 500 best performing US companies. There are lots of requirements in order to be in the S&P 500. For one, you have to be a US based company. You have to provide a stock for sale to the public for at least $1, and at least 50% of your shares of the company has to be available to the public for purchase. Some companies that are included in the S&P 500 are Apple, Microsoft, Johnson & Johnson, GE, Wells Fargo, JP Morgan, Berkshire Hathaway, and so on and so forth. We can go on and on. I'm not going to name all 500. But that's essentially what the S&P 500 is. It's basically, how is the US economy, the US stock market performing? How are these top 500 companies performing as a whole with all of their stocks put together? It's all of their stocks in one fund, an index fund. It's a type of index fund that measures how these companies are performing. So typically, mutual funds and different types of mutual funds and different types of index funds measure up against the S&P 500. So is it outperforming the S&P 500 or is it underperforming the S&P 500? These are things that you would need to ask yourself when looking at different mutual funds or index funds. Again, if you'd like to talk about this in more detail, I highly suggest attending the class, the Investing 101 class, because I'll be sharing what I invest in and what I think is the best, the cheapest, and the safest way to invest. And it's funny because, and I'll give you one little taste of what I'll be talking about. I mentioned in last week's video that I kind of disagree with Dave Ramsey's investment advice. Not everything about what he says I disagree with, but some of it I do disagree. And as a matter of fact, he just posted a video on his YouTube channel that explains his investment strategy. I'll leave a link down below if you're interested in watching that. So essentially, he tells people to invest in 4 types of mutual funds. Now, the biggest thing that I agree with him most, and don't get me wrong, I have nothing but the utmost respect for Dave Ramsey, of course. I mean, what he does to motivate people to get out of debt, which is the most important, is phenomenal, okay? But he tells people to invest in these pretty expensive mutual funds that have a lot of fees associated with it. And in that video, he said, just saving on some fees is not going to make you wealthy. Well, I mean, again, it's from the perspective of somebody who's worth $55 million. So, he could afford probably to, with those fees that a lot of those brokers make. I mean, people make millions, okay? Brokers and these investment companies make multi-millions and millions of dollars off of people like me who just blindly invest in mutual funds without really knowing what's going on or how much those fees, every single time you buy and sell stock or an asset, a fee gets associated with that on top of an annual fee on top of that. So For instance, for Dave Ramsey, who's worth $55 million, he can afford a couple $100,000 in fees over a 30 or 40 year period. But for somebody like me or you, a couple $100,000 would be a huge difference in my retirement fund. Okay, these fees can add up to you, say, having $700,000 in your retirement fund at retirement, as opposed to $200,000 or $300,000 in your retirement fund. There's a big difference there. I would much rather have the 700,000 than the 300,000, wouldn't you say? So that's where I disagree with him. And again, I'll be talking about that more in detail in my class. That's just a little teaser of what I'll be talking about in there, because I also will be sharing what, like I said, how I invest, what I invest in, what's the safest, cheapest, and easiest way to invest. All right, so let's talk about the Dow Jones. The Dow Jones Industrial Average is a price-weighted average of 30 American significant stocks traded on the New York Stock Exchange and NASDAQ. It essentially indicates how the overall stock market is performing. It's very similar to the S&P 500. The 30 stocks, which are price-weighted, have an overall effect on the overall market, right? So if you're thinking, well, there's only 30 stocks, so how can it really measure how the stock market's performing? Well, these price-weighted stocks, what it means when I say price-weighted is some of the most expensive shares you can buy, and they have more influence over the stock market's performance than the lower price shares. So the more expensive shares have more power over the performance of the market as a whole than the less expensive shares. And that's where the Dow Jones really comes in and has that effect on measuring the market. So again, a lot of mutual funds and index funds measure up against the Dow Jones to see how it's performing. And these 30 companies, these top 30 companies, these are your Visas, your Apples, your Microsoft, huge companies. But the Boeing, I mean, like, you can go on and on. Again, the companies change. The only company that has been in the Dow Jones ever since it was created, and I think in the 1800s, late 1800s, is GE. So it changes. The 30 companies change as technology changes, as consumerism changes, all of that change. As those changes happen, the companies that are included in the Dow Jones changes. That's what mutual funds are, index funds, S&P 500, and the Dow Jones are. Leave a comment down below. Do you invest? If you invest, what's your investment strategy, or what are some of the things that you invest in? I would love to know. We can learn from each other. The link for my Investing 101 class is down below. Make sure you download that. But first and foremost, if you haven't paid your way out of debt, please do that first, okay? Live a debt-free life. The two most detrimental mistakes you can make is live a life full of debt and don't invest and plan for your future. Those are the two of the biggest mistakes, and you can avoid those. You have the power to avoid those things. So download my free zero-based budget template down below. If you haven't, start a plan to pay your way out of debt so that you can then invest for you and your family's future. So again, leave a comment down below and let me know what you invest in, what's your investment strategy, or if you're currently in debt, what's your plan to get out of debt? I would love to know. If you haven't hit that subscribe button yet, tap my picture up above, and you can also check out my previous video right over here, and all my social media platforms all listed down below. Thank you guys so much for watching. I've really enjoyed this series, and I'll see you in the next video. Bye.